Hello, this week's video is about trend lines based on the request that we had. Trend lines, I have some very specific rules associated with trend lines, and what I'm going to show you today is exactly how I do it, as opposed to general trend line theory. I've used these methods for many years, and I basically know that it works. So we're going to go through some slides first of all about all those rules, and then I'm just going to take the euro-dollar and show you how that has worked in the recent past. Firstly, it's very easy to get attached to a trend line and start drawing support and resistances based on what you want to happen or what you hope to happen. So I've gone and seen many traders over the years and been in some ways quite staggered by the sheer volume of trend lines placed on a chart. The problem with trend lines is that they represent the maximum point in uncertainty, in the fact that will the trend line hold or will it fail. So it can produce quite a lot of dilemmas, especially if you don't have structure and rules around what you're trying to do. And this links into the fact that just because you think a trend line is important, it does not mean that anyone else does. And if you find yourself redrawing lines that are shallower in angle, you are probably emotionally attached to your position, which can be very damaging. So what are the rules? The longer the time frame, the more important that line is. Begin with lines on weeklies and dailies. It's actually extremely rare for me to ever draw anything else. And if you are going to, then trend lines have, as far as I'm concerned, little value on charts below 30 minutes. They can only be broken on a closing basis, and if you're being conservative, you want to see a 2-bar close beyond that line. Trend lines are for crowd following. And in the FX market, this creates a specific problem in that everybody has different data, and so it's not like a futures contract or an index where effectively just about everyone's got the same set of data, which means that they're more likely to be drawing exactly the same lines. You could draw a long-term trend line over many months, and if the high or low is different by just 5 ticks, by the time it might come to that line many weeks or months later, it could be big figures away. So there's some ways that we have to try and get around that problem. Very specific rules. Resistance lines can only be drawn downwards, unless it's a channel line, and support lines can only be drawn up. This is to stop you getting emotionally attached to a long position by drawing supports or trend lines that are moving downwards. Beware of drawing lines that are too steep, as it's highly likely that they will be broken. And very importantly, if a resistance line is broken, it can later become support and vice versa. So don't delete your line that has proved to have worked previously just because it appears that it's no longer valid. Trend lines can only be connected by 2 5-bar peak points. Ideally, but not always, no piece of data can come between them. And initially, when you're practicing, only connect the most recent peak points. As you'll see in the example, I'm going to break that rule on one of the lines. What this does is greatly limit the number of physical lines you can actually draw, and quite often any chart on a daily data might only have maybe 1 or 2 or 3 trend lines that are actually relevant. And channel lines have the same rules for this. I think we've done it before in previous weeks. That's just to show what a 5-bar pattern is. The middle bar of 5 has to be the highest point, doesn't matter what 2 either side are, or the middle bar of 5 has to be the lowest point. A few extra rules: if you can draw supports and resistances from the most recent peak points, then this tells you that the market is in a sideways pattern. And this is actually very useful. One of the hardest things to do is to understand when we are in sideways. Quite often, by the time a lot of momentum-based indicators tell you that you are, it's been going on for a very long time, and it's more likely that the sideways is about to end. The steeper the channel, the less chance that a break outside of it will be sustained. So that's specifically for channel lines. And because we're looking at FX, you must also use the futures contract. I can't overemphasize this enough, really, because if we're looking at the futures contract, everyone has the same data, and so it's more chance that you're drawing the correct line. Also, very importantly, is to understand the delivery period associated with the futures, and also what is the rollover based on the CME rules. You can go to the CME website and see them. But what you need to do is set the rollover 5 days before expiry for all of the currencies except the Canadian, which for whatever reason is actually at 6. The way that you know that you've drawn a correct trend line is when it reacts from it the first time it actually gets to that point. Now we're going to look at some recent trend lines on the euro-dollar on both the spot and the futures. Looking at the spot first, and I've just marked the major trend lines that I've drawn from last year and then 2 from this year really. P1 and P2 highlights where those points are referenced from. You can see that this was not the most recent here, although that was. And then we've had one here where I've connected where we touched it here, and then more recently we've had a very shallow trend line. So let's have a look at how price behaved when it actually got there. So this is now the euro-dollar on a 60-minute basis, and the first line that we had, we actually closed below it, but then it couldn't manage a 2-bar close, and then it reacted back off it. It did it again in this area here, before finally we did get the break, and what happened then was we came down towards the next trend line, and on 2 occasions we got very close and we didn't actually quite touch it. And this is an example of how, even though I have probably the best data feed that you can have with CQG on SpotFX, because they manipulate the data to a certain extent, it didn't quite get there. However, that changed slightly when we look at the resistance line in the more recent past. We had a gap higher the other week on the Greece story, so we had a very, very strong rally. It was on a Monday, and we came up and we got very, very close to that trend line, just missed it by a couple of ticks. However, a few days later we came back and we hit that trend line to the tick, and then that has proved to be the high since then, and we've come all the way back down. This does give us some execution issues, and this is why we have to look at the futures as well. Personally, I will always trade slightly in front of a trend line, and depending on the market would dictate how many ticks that would be, but allowing for the spread on FX, I would be at least 5 or 6 ticks ahead of a trend line to give myself a better chance of a fill. If we go to the futures contract, then I have exactly the same lines, so I've connected the same points. And then if we look at what happened on the 60-minute data, we have a slightly different story. The first time, it's almost identical in that we break it the first time, respect it slightly, and then finally break down. But the second time, when we hit the next trend line, price just goes below that line by just 1 tick, and then we finally break down here. And this is an example whereby, in this instance, because everybody has the same data, the crowd following works that much better. The other thing to remember is the support can come back as resistance, and so when we broke, the price bounced back up again and just stopped, I think, 3 ticks before that line. And then if we look at the trend line that was on the recent past after the Greece story, again, we missed that line just by 1 tick, but we came back to it a few days later, and again it went just 1 tick above it. So you really ideally need to look at the futures contract as well and be aware of the fact that if you're drawing the correct lines, even in what was a very bullish scenario based on the euro, this trend line had sufficient power to create the whole high since that moment.